Hey friends, this is Joe Soto, team leader here at the Soto team, and thank you so much for taking some time to join us on this webinar and learn about this VA loan benefit. Whether you're looking to purchase a home or refinance a mortgage, our goal is that you can get some comprehensive knowledge regarding the VA loan, its benefits, and how to utilize it to help yourself and your family. So let's start with a bit of history. The VA loan started way back in 1944. It was put into place to help servicemen and women coming back from combat to be able to purchase a home for their families. Fast forward now, almost 70 years later, and it's still a great tool to help people get into a home with no money down, no private mortgage insurance, and very lax and simple guidelines. A common myth that I hear from veterans every day is that the VA is the bank or the lender, that they give the loan, and that is 100% not true. The VA's job in this process is to provide guidelines to the banks like myself as far as how to qualify for that loan. So they are not the bank at all, but they are guaranteeing the loan. They are setting the guidelines, and if you were to default on the loan, basically Bank of Joe would get paid even if you foreclosed. Next, let's discuss eligibility. So you are eligible for a VA loan if you've served in the Army, Navy, Marines, or Coast Guards, and you've had 90 days of service during a wartime period. And that's 90 consecutive days of service during any period of time. And for those of you who are in the reserves or the National Guards, you too may be eligible for the VA loan. The guidelines are a little bit different. In this particular case, you would have to have 181 days of service at any point, and you're going to be eligible for the VA loan as well. The most important thing about getting a VA loan is obtaining your certificate of eligibility. So whether you've served in the Navy or Marines, or if you've been in the Coast Guard or reserves, you're going to need this certificate of eligibility to show the lender that you're eligible for that VA loan. So you can go through the VA and try to get that. It takes a little bit of time, or you can come to a lender like myself. I have access to the VA portal. I can put in your information. I can get that certificate of eligibility very, very quickly so that you can know you're eligible for the VA loan. So who can finance a VA loan? Answer is pretty simple. It's a veteran with their spouse, or a surviving spouse of a veteran. It's really important to know that if you are financing with a VA loan, that property must be your primary residence. Now there's some stipulations and things with that we'll get into, but it has to be a primary residence. And in terms of what can be financed with regards to the property, here's the number one thing, is the VA wants to make sure that the property is in good condition for the veteran. They don't care about the bank, they don't care about the seller or anything like that. They want to make sure that this home doesn't have any health or safety issues that are going to impact the veteran negatively. And why would you choose a VA loan? The answer is actually better, why wouldn't you? The benefits are so great. Even if you're eligible for a conventional or an FHA loan, the VA loan offers you no down payment, no private mortgage insurance, and also very flexible guidelines with regards to being able to qualify for that loan. So quite simply, if you're eligible for the VA loan, you need to take advantage of this benefit because it greatly outweighs all of the other programs that are available to you. Another important thing when doing a VA loan is working with an experienced lender. A lot of people think that the companies out there like Veterans United or USAA, that they are the VA. And as I explained earlier, the VA is not a lender, but you need to work with a lender who's experienced with VA loans, and they are what's called the direct endorser for VA, meaning they do everything in-house on behalf of the VA. So you're not dealing with the VA turn times and how they can process things very, very slowly. You need to work with a lender who's going to close and execute quickly. Another advantage of working with a lender who specializes in VA loans is that we know all of the ins and outs. You don't want to get into escrow on a property and get surprised by residual income or debt to income or anything that could prevent you and your family from closing on a home. So it's really, really important that you work with a lender that knows the VA guidelines. So working with a lender who specializes and knows about VA loans is so important. Whether it comes to residual income or debt to income or the guidelines, You want to make sure that this lender is aware of everything VA, not just conventional or FHA. So it's really important to ensure that you're going to close on time and smooth and get the keys to that house. So what's the next step for you? If you're thinking about utilizing the VA loan and you want to know what you need to do, the first thing we need to do is get that certificate of eligibility. We can help you and log into the portal and see how much eligibility you have, which will help us determine how much of a purchase price you can get with zero down payment. So let's go back and dig into who can finance a VA loan. And first is a veteran by themselves. So if you're a serviceman or woman, you're able to apply for that VA loan by yourself and purchase a property just as a single man or woman. If you're married, you can purchase that property with your spouse. So husband and wife can go and purchase the property on their own as a couple. Where things get a little bit more complicated is on these two scenarios. First is if you have two veterans purchasing together. So let's say you've got a friend and you guys go in and want to buy a property together and you both are eligible for VA. Well, the truth is, probably only want to use one entitlement on the transaction and use one now and maybe buy a second property later on, because you don't want to use two on one transaction. It would tie up that VA benefit on that property. The other way that you can do it is a veteran and a non-veteran. And this is one a lot of people don't talk about. And a veteran and a non-veteran is usually what you see is a person and their fiance, and they want to buy. And technically you can do that and utilize the VA loan. However, you're going to be required to put 12.5% down payment if you're utilizing a veteran and a non-veteran. A lot of lenders think that you're not allowed to do this, but that's not true. You actually can, but you're going to be required to put that 12.5% down. And a lot of times if we look at it, most of the times in that scenario, unless you're coming in with a large down, you typically wind up looking at a conventional or an FHA option. But if you have that down payment, you can still do the VA loan. So regarding the property that you're going to buy, it must be owner occupied. That means you have to live in the home. So where it gets a little tricky is, well, Joe, how long do I have to live in that property? The answer is 1 year. You have to live in that property for 1 year, and then if you move out, you can turn that property into a rental. However, what we've seen some people do is utilize that VA benefit and buy up to a 4-unit property. And when you buy that 4-unit property, you live in 1 unit and you can rent out the other 3 to help you offset those mortgage payments. And in some instances, if you're buying a place near a base, that's always rental income that you're gonna have there. And if you ever move out, you can make that into a 4-unit rental and then go buy a single family residence later on. The other question we get a lot is property condition. And as I said, the VA, they don't care about the seller or the bank or anything like that. They wanna make sure that the veteran buying the home is not buying a lemon. So there's no mold, there's no broken glass, exposed beams, health and safety issues, nothing like that. I will tell you that the VA will not allow it and protect the veteran at all costs, because they don't want the veteran to buy something and then all of a sudden come out of money tens of thousands of dollars. Condos can also be financed utilizing your VA loan. However, there is a protected list of VA approved condos. And so if you're looking at a condo or a townhome, one of the things you have to keep in mind is that that condo or townhome must be approved by the Veterans Affairs. If it's not, they're not going to let you get a loan on that particular building. Some of the benefits of the VA loan are, as I mentioned before, no down payment, literally zero down. And typically when you get a loan with zero down or a lower down payment, your interest rate goes way up. However, since the VA is guaranteeing the loan, like I said earlier, the interest rate is not any higher. Whether you're putting 0, 5, 10, or 20% down on the VA loan, that interest rate is the same. You don't pay a higher rate because you're putting less money down. The other benefit that we have with the VA loan is no private mortgage insurance, or PMI. So think of this like an insurance policy you're taking out on yourself. You're basically taking out insurance to tell the bank, I'm going to make this payment on time. Well, on the VA loan, the VA is covering that insurance for you. And this could be $100, $300, $500 a month, that when you utilize the VA loan, it's zero. Another big misconception that we get with the VA loan is that there's no cost. right? The VA is essentially covering the down payment, but there are closing costs, title insurance, escrow, lender fees, processing, underwriting. Like, there's still costs when you're getting a VA loan. Now you can get a seller credit to cover all of those costs. That's something that's known as a VA no-no. But every negotiation is different. So in some markets, you may be able to get a credit for closing costs. In some markets, you may not. So it just depends on the property, the location, the negotiation. I've seen some work, I've seen some that don't, but it's a case-by-case scenario. But at the end of the day, yes, you could get zero down, you could have the seller cover your closing costs and come out of pocket with $0. So how does the VA do this? Well, they collect a little something called a funding fee. And the funding fee is collected on every loan that the VA does, and it's an upfront fee that is financed into the loan. It's usually 1.75 to 3.3% of your loan amount. However, if you do have a service-related disability, you could be exempt from the funding fee. And the way that we would find that out is by pulling that certificate of eligibility, which is going to tell us if you're exempt or if you have to pay that funding fee. Now, credit and income requirements on VA, again, like I said, are very flexible. The VA actually doesn't have a credit score requirement. Some lenders have different requirements, but if you can get an approval through the automated system, I've seen people get approved with credit scores in the 500s on their VA loan. And for income verification, again, VA is going to be flexible than conventional or FHA loans and let you use that income and not really beat you up with regards to how much income you show. So there are requirements, but VA is definitely more flexible when it comes to income and it comes to credit. One of the least talked about benefits of the VA loan is something called an interest rate reduction loan, an ERL as we know it. And what the ERL is an opportunity that the VA gives to the veteran and their family to refinance that mortgage and get the rate down. So let's say your rate is 6.5 when you close. If that rate drops more than 0.5% and you've made all your payments on time, you could be eligible to take your rate down from 6.5 to 5.875 or from 5.875 to 5.3. Every 0.5%, the VA will let you do this as long as you've held the loan for 6 months. Now, it sounds great. It sounds like they're doing something awesome for you. Remember, the VA's job is to guarantee the loan. So if you could pay at 6.5, they're pretty sure you can pay at 5.5 or 5 or 4.5. As that payment goes down, yes, it does benefit you, but in reality, kind of benefits them too. Next, let's address some of the myths around the VA loans because there are a lot out there. And the first one that we see all the time is, I can only use my VA loan one time. That is 100% not true. You can do what's called a subsequent use on your VA loan. I've had clients buy 2, 3, 4 properties utilizing their VA loan and putting $0 down. Another myth that we run into all the time is that the seller is gonna have to pay a bunch of costs. Again, not true. Seller is not required to pay any additional costs as long as the veteran's total fees do not exceed a certain number. I will tell you that this day and age, it's very, very, very rare that you have a lender trying to price gouge a veteran and the seller winds up having to pay fees. It almost never happens, but so many people think that the seller is gonna have to pay all of these things for working with the veteran. Another thing we run into is loan limits. So back in the day, VA would only finance a certain amount. They would only let you finance 240 or 417 or 600. Now, there is no limit as to how much you can borrow with a VA loan with $0 down. So yeah, you heard me right. You could literally borrow $1.5 million, $2 million and not put any down payment. I've had clients purchase multiple unit properties for large amounts, literally with $0 down. There's no longer a requirement on how much the VA will guarantee and allow you to finance. One more myth that we run into is loan assumability. So in the world where interest rates have gone up, people are asking, how do I assume somebody else's loan? So the VA loan is unique, meaning if a seller has a VA loan on their house, the new buyer can actually assume that loan and take it over. But what's the catch, Joe? The catch is that if the seller owes, let's say, $600,000 on their house, and now they're trying to sell it for $700,000, well, that new buyer has to come in with $100,000. They have to make up the difference in order for that loan to be assumed. So it is possible. It's a very unique circumstance. If you run into the situation, reach out to me. We'll try to guide you on it. But it's one of those things that nothing else allows, only the VA loan. Next, let's talk about the BAH, or your basic allowance for housing. And that varies from state to state, city to city. I know if you're in places like San Diego or LA, that BAH is very high. And that's something that's given to the veteran to help offset housing costs. And in a lot of markets, you want to keep your housing expense below even what the BAH is, right? But when you're qualifying for a VA loan, the lender's going to let you use that income to help you qualify and buy a house. So it gets a little bit tricky because it's non-taxable income. It won't show up on your W-2, and some lenders don't see it and think you didn't make that money, but the reality is that money's going into your bank account and you can use that to buy a house. And here's the beauty of using that BAH. So you use that BAH, you buy a house, and you have a mortgage payment that's right around that same number, maybe even lower. The beauty is you buy that house, if you move out and buy something else, awesome. The rents are going to keep going up. So what you're going to get for that property in the future is going to be higher than what you're getting today. So 3, 5, 10 years from now, you're going to be putting more money in your pocket. The other thing you're going to get is appreciation. So if you're utilizing that BAH just to pay your rent, all you're doing is making your landlord rich. So by investing that money into a house, now you're investing into your life, your future, and your wealth. Finally, let's talk about what you need to do to successfully close on your VA loan. You've gotten your certificate of eligibility, you know where you're going to be and where you want to buy. So what's next? Well, the next thing you need to do is have the right lending team. You want to have the right team in place to help you know your options, know what those closing costs are going to be, what money you're really going to need in order to close the deal. Not just, down payment is zero. What do you really need? What is reality? And having that lending team in place is going to help you. After you do that, next thing you need to do is find a great real estate agent. Not just any agent, but somebody who's worked with veterans in the past, somebody who knows how to represent a veteran, how to present an offer that looks strong, even with zero down. Somebody who's going to fight for you to get your offer accepted in a competitive market. It's really, really important that you have both of those pieces together. Step 2 is getting pre-approved. So as I mentioned, the pre-approval process is basically 3 steps. You take your application, you submit your paperwork, and you review your options. And that process of reviewing your options lets you know how much you qualify for, gives you that pre-approval letter, and lets the seller know that you are serious about buying their house. It's really that time for you to know your numbers. I always say the most important pieces of the puzzle are monthly payment and cash to close. And having a strong pre-approval is going to be the key to making sure there's no surprises later on. Once you have the pre-approval, then the real fun begins. It's getting out there and looking at houses, right? Everybody loves looking at houses, but I will tell you, it is stressful. You make an offer on a place, you feel like it's strong, and then you don't get it. It could be a little bit disheartening. So your realtor is going to get out there with you. They're going to show you properties. You're going to make offers and know what your payments and everything looks like. That way you can make a good financial decision. Once you find a house, then you're officially in escrow. You're going to make an earnest money deposit. You're going to do your home inspection, your appraisal. You're going to get your loan finalized. You're going to get homeowner's insurance. There's lots of moving pieces once you're in escrow. And that time to do your inspections is very important because it's going to be your time to do your due diligence, to make sure that you're buying a house that you can see yourself in for the next 3, 5, forever, as long as you need to be there. Through the process of escrow, lender's gonna ask you for stuff, escrow's gonna ask you for stuff. There's gonna be quite a bit of paperwork. But once you get all of that done, you get what's called clear to close, you sign your loan docs, and the next day you'll go ahead and get the keys to your house. And at that point, all the stress is gone, all of the anxiety is gone, and at that point you can get ready to start moving in. So as we wrap up today's class, I want to say thank you so much for spending some time with me. I hope you found this information very valuable. And if you have any questions, you can go on my website, thesototeam.com. You can send me an email personally at joe@thesototeam.com and reach out to me anytime. On my cell phone, personal cell phone is 714-235-6010. If you have any questions about getting pre-approved for the VA, buying, refinancing, building, anything regarding the VA home loan, we're here to help you. We want to be on your side. We want to be part of your team. And I thank you so much. Have a great day.